morning, everyone. Good morning, everyone. Today is not July. What the hell am I thinking? Good morning. Today is February 3rd, 2022. All right. Wow. Okay, guys. We're going to cover some stuff that went down yesterday in the markets. All right. Number one, Facebook dropped. Everybody knows that. And that kind of was expected a little bit, right? Because we have to learn to listen to these guys when they speak, right? So last earnings on Facebook. Welcome to Beyond Charts Morning Brew, guys. We're going to set it up. We're set up. Let me see who's out there first before I get into it. Oh, my God. Oh, my God. James, what's up, buddy? Yes. It's James' birthday. James, happy birthday, brother. Happy birthday. All right. Let's wish us a good trade for today. All right, brother. All right. Everybody's waking up slowly, getting up. All right. So a couple of things I need to talk. All right. So today, a couple of things. But let's talk about Facebook. Facebook, they missed bad. They missed pretty bad. But it was kind of expected, right? Because think about it. Last quarter, what did they say? They said that, remember, Facebook and Google have the Apple iOS issue, right? Meaning that they're not allowed to track us, right, on your Apple device. They were tracking you, right? Like people, it's so funny. They were tracking us. That's why they were doing really, really well. That's why they knew exactly what you wanted, and things popped up, right? Now, since they passed that and iOS had a iOS privacy issue, Google has workarounds, right? And that's what all these companies didn't do well, like TTD and all these ad revenue companies didn't do well. It's for that reason. But with Facebook, so now automatically they changed their name to the Metaverse, right? And they did this whole thing, which is kind of weird, kind of what is Black Mirror type of thing. But when you really think about it, I think that was their workaround. They haven't admitted that there is no workaround that, and how they're going to regain that revenue that they're losing because they're not tracking us legally, right? Legally, they're not supposed to track us. Are they still tracking us? Maybe. But there's no workaround that. And so they built this metaverse. And metaverse now, it's not now, it's 5 years from now. So, and again, are you searching for things on Facebook as much as you were before? I'm not. I'll go to Google Chrome or any other search engine. I don't even have Facebook on my iPhone anymore. And again, I think that's the growing trend. So they're losing all that. And even if I have my iPhone, they can't track me. Where you have Google, you're still going to be using Chrome, YouTube. They have all these resources where they can still track you by using their apps on other mobile devices besides an iPhone. So what does Facebook have? They really don't have anything, and I don't know. So just I think that, and when you're on your desktop, basically, are you going to be going on Facebook searching for things, or are you going to be going on a search engine, right? So they're not going to be tracking. They don't have Google Maps. They don't have any of other apps that they can track you. So their saving grace was what? The metaverse, right? And everybody was excited about that. But again, that's pretty costly. And I don't know, for me, my generation, I'm not going to be putting on goggles to live in the real world. I'd rather live in the real world. That's more for the younger generation. So again, that's more down the line. Those guys aren't even making money yet, right? So are those going to be your consumers right now at this moment? So I don't think Facebook's going to last at 250, guys. I'm kind of suspecting Facebook will probably go down to 150. And the reason why is because he hasn't even admitted it yet. They haven't really come out and said that there is no workaround that iOS privacy issue. He hasn't done it yet. And actually, he told us some other stuff. He told us, let me see. Did I write it down? Yeah, I wrote some stuff down here. He told us there's a lot less data, right? There's a lot less data now, right, to track us. Right? They don't have access to it. So what does that mean? That translates to less data, less ad revenue, right? If you're an advertiser, you're going to spend more money to Facebook, or you're going to spend more money to people who are going to give you the data. Who's going to give you the data? So money goes from Facebook to where? To Google, right? Do you see that correlation? So money's going to go. Now, Amazon, I think Facebook's in trouble because Amazon, think about it. If Amazon misses today, that's bad for Facebook. We go lower. If if Amazon misses today, then it goes to Facebook. If Amazon hits, they split, they do, then money goes from Facebook to Amazon. So I think Facebook is a lose-lose situation again. But let's set that up. I wanted to talk about that. Let's go into what's going down in the markets. So a couple of key things you have to learn about too is the Bank of England raised their rates. Okay, so I think I have that somewhere. Bank of England raised rates, back-to-back raises since 2004. They went from, I think they went from 0.25 to 0.5, and there's been a lot of talks about them going to 0.75. Why is that important? Well, they're the Bank of England. That's probably going to signal to the market for us to raise about 0.5, next in March, right? So this is what the market's kind of looking at it. And again, Skates, what's up? Good morning, Win. Good morning, brother. And then Skates called it, dead cat bounce. That's right. It's exactly that. So let's look where the futures are at, right? So the bank will raise rates, and tomorrow we have jobless claims or the non-farm payroll numbers coming out 8:30 in the morning. I'm hearing they're not going to be good, guys. I'm hearing and again, ADP, which is a private payroll, came out yesterday. They weren't good. Now, here's the thing. So the non-farm payroll, they also will be skewed or biased, okay, just like CPI numbers. So there's a lot of stuff they're changing currently. I can't, but just know that ultimately I don't think they're going to be good, and they're not going to be good. I mean, let's just say they're not going to be good. So let's just watch the momentum. Let's see how the market's going to react to it, and we're going to talk about the so we're going to talk about how's that going to react to the market. All right. So right now, futures are at 45.30. That's going to put us at 45.40, somewhere in there. Just believe that 45.50. Okay. So we're down. 10-year notes at 187. Let's see what Barron has to say. Facebook's weak outlook and what it means on social media. Okay. Metaverse delivers more weak earnings and even weaker outlook. Again, so this is everything I've told you. If you go into what they said, and again, Snap and Pinterest just announced too. So I think they're going to announce today. Are they going to do well? How much? Just ask yourself, how often are you on Pinterest? Or how often are you on Snap? Right? So I don't know. I probably would say those are probably not going to do well. As far as Amazon, Amazon's and then we're going to talk about Amazon too. But again, let's just go into it. All right. So right off the bat, we're going to look at the market environment here. Okay. Let me get rid of myself. And here it is, guys. So, and this is what let me put what Skates wrote. And this is exactly what, so right now, as a momentum trader, we're looking at the momentum. So this is an extreme level 422, 42.22 is extreme. That's what they bought it. MACDs are turning. Now these are going to be delayed here, especially in the longer time frames. So again, they're starting to turn. We're still below zero, so we still have a bearish bias to this thing, and this is creeping up. So it broke the 200-day moving average, and it's creeping up. Now, ironically, I think it was Skates who's mentioned this. If we put the Fibonacci retracements, right, and we put it from the top to the low here, and Fibonacci, right, the 66 percentile, the 66% right here, that usually serves as a last line of defense for the swing, right? The swing. So meaning the swing will go down, come down either the 20th, the 38th, the 50th, or the 60th. So this is going to be pretty strong. And the 50 days right there. So is it, again, and when I showed you this weekend in 2008, we had about a 14 days where it consolidated, and we counted that number from the low, and this is right now 1, 2, 3, 4, 5, 6, 7, 8 days. So what's going to happen, right? So if this is going to follow the same situation where they're going to start liquidating, right? It's not going to happen all at once. Could this happen? And let me just kind of share it. Could this happen? Could it linger here for the next, let's say 14 days, 9, 10, 11, And it could be before 14 days, right? Could it linger here? This stretch sets up, and then it could drop here, but it's setting up for exactly what Skates had mentioned right now, right? So basically, where did he say? Right there, right? So the dead cat bounce, right? Dead cat bounce right there. So, or suckers rally, whatever you want to call it, could be setting up for, because the only thing holding this market right now, let's really think about it. What came out? It was Amazon. It was only a few companies that are holding this market up right now. It's not a lot. I mean, this move is just, it's not a lot. Everything's kind of like, eh. But again, as a momentum trader, we trade these momentums. Now, here's the thing. I'm just going to warn you, we're probably coming to the end here of momentum, right? So just switch your hats, get ready here, because this could be another opportunity to the downside. Buy yourself some time, but let's set it up properly, and we're going to be looking at the hourlies for that. Okay, so that's how we look at it. But right now, that's going to be the last line of defense. And if you notice, yesterday was really weird because as I'm watching the market midday, I saw a divergence happening. I was watching the XPX and the NDX. The XPX spiked, right? It spiked, but at the same moment that the XPX moved up, the NDX went down at the same moment. So that was a little divergence that I saw in price action. And it was like, did they know that Facebook was going to be bad? So that was, I don't know. I mean, so basically, and think about it, 45.92, we couldn't hold that. That was a spike. It was a fake out, right? It couldn't hold that level, right? So again, watch that. As far as the NDX, really battling with that 200-day, barely made it above it. And the Russell is just weak, right? So if anything, I think the Russell is the weakest out of all of them. It's just this is where you saw a lot of the stocks in bear market territory before a lot of the FANGs or the techs. So this is why this is a lot weaker. So again, this is probably going to drop faster. Watch the Russell. One of these is going to lead the way. Okay, so that's what we have here, and just set it up, guys. Get ready. Okay, so now let's look at the XPX, or let's look at the VIX. The VIX today is pretty normal today. So we had 3 days of hourlies. This is hump day. This is pretty easy. So now fear died down as expected. Fear died down into these earnings, which is great. But now fear is entering back in, especially with Facebook. Okay, so now key levels to watch if we're gonna drop this week. I don't know, but if we do drop, you're gonna be ready. Put your alerts right there at 25.35. So if you're looking for bearish trades and you're looking at your trades and you're like, man, should I get in, not get in? And you hear this alert, this is just going to tell you you're right. You're thinking the right way because there's fear entering into the marketplace. And that's how we utilize that. As far as, is there a bullish buy in this? Yeah, let's throw it in there. If we start breaking below this 20.54, then I'm just going to throw it in there. Let's see. I don't think it's going to happen, but because there's definitely fear entering. What I told you, it's probably not. It's not going to happen. It's more than likely we're probably going to stay in this range, if anything. Now the saving grace today is going to be Amazon, and we're going to talk about that. Now the yields went up a little bit. Again, just hanging out here, and again that's expected because the Bank of England raised their rates. Now here's the thing I want to tell you too. So. The yields have to go up, guys, because here's a 30-year yield. This was at 2.15. The problem that we were having, right, 30 years, and this is where the inverted yield curve comes in, is that, the 10-year was going higher than the 30-year, right? That's a problem, right? That's a problem. So when short-term interest rates were going higher than long-term interest rates, that's a problem. So this is why this whole thing with interest rates, inverted yield curves, it's a problem. And this is why the Fed has to do something, right? They have to do something. All right. So let's look at the XPX, where we're at. So for today, again, this is the hourlies. This is the 15-minute time frame. Unfortunately, this week, we did not get our great setups on the XPX as far as like our system, right? We had some breakouts a little bit here. You could have scalped, but not the ideal entry for XPX, right? On the 15-minute time frame or the hourlies. So just notice that we broke out and it just kind of took off. That was your entry. And we had these little spikes on the MACDs. That was one that existed at the close. And then yesterday, we're just kind of lingering. So just be careful here. What's going to happen? We're going to open up a lot lower today. We're going to open up at, where am I? 45.30. So that 45.30 is going to put us right at that 45.40. All right, it's going to put us right below the 50-day moving average. Okay, so let's see what happens there. So we're breaking the boxes. So we remember these boxes, guys. We're trading above. This is the first time we're trading below the box. Okay, so let's see if it spikes up, maybe to that 45.50, and see where the MACDs turn here. But we're probably going to open up there. The question is, now there is earnings coming out for Amazon. So are we going to tank into that earnings? Don't know. And the saving grace on Amazon is going to be two things. If they raise interest, they raise the prime, right? Which I hear whispers that they are. And then if they do a stock split, right? If they do a stock split, that can be the saving grace on Amazon. But other than that, I don't really foresee anything else, right? Because they've told us the problems they have. So this is the thing where I'm telling you, we have to listen to what they told us. Throughout this quarter, they said wage inflation is high. They have supply chain issues is low. They have what else? They have a warehouse that went on fire. And on top of all this, you have Mr. Bezos and Mrs. X Bezos selling off their shares every quarter. So just because that they survive off of that. So that's a lot of bearish activity on that. So don't know, but there's a couple of things you can do. It's if Amazon does those two things, I think it could push it higher. If it doesn't do those things, we can go lower. I'm thinking like 2,500. But and I'm telling you that because this is probably going to bring down these XPX as well. Okay, so XPX key levels right here. If we have here, it's probably going to go down to that 44.83. There's a level at 45.15. And then we have these levels up here that it can consolidate at 44.55, 44.33, and just remember we have this 42.22 on the bottom. All right, so those are the numbers. Again, the MACDs are crossing here. If this crosses, it's probably going to work its way lower, and again, not maybe to there, or this is going to open up right there. If this starts tanking, maybe that's an entry right there. But we have earnings coming out as well. All right, let's go into Bitcoin. Bitcoin doing exactly the same thing we thought. Came up, back down. Again, let it base, or is this a continuation going lower? Don't know. So again, we don't want to get caught up in this action. MACDs look good, but again, it just kind of signaled that this is going up and then going down. If this starts breaking through, we're probably going to retest that 33,000 lower. So again, don't chase, let it base, let it break above 39,519, and then we talk. Okay. Other than that, there's no reason to chase it. Just chill. MicroStrategy, a little bit better. Again, if this goes down, this is going to drop. If this goes down, that price is going to drop to 150. Ethereum's doing the same thing. Again, don't chase, let it base, just chill at 28.19. All right, let's go into what's going down here. This is the market movers. Let's look at the market movers here. All right, so we're going to talk about Google and a couple other ones that I've noticed here. If you have a stock tick, let me know in the comments and I will cover that. Any plays that you see, because my eyes I look at these only, but I'm open to looking at other ones. Tesla, let me look at Tesla. All right, so right off the bat, what we notice is, again, everything's going to come back to the 50. Russell is already there. Okay, so Russell is already there. IWM. Google working a little bit, got hit pretty hard, right? So what we did, came back down. And here's the thing. Google came out with good earnings. Now, the thing that I started noticing, why did they do the stock split date so far out? There's July 1st. So that kind of brought up I was like, well, that's weird, but interesting. Now, I think Google, here's the tell of the markets. If Google goes back up, it can probably retest these highs of 3,000. It should retest the highs of 3,000 if the market doesn't tank, okay? If the market kind of dilly dallies here, let's see. But right now, we have this is going up. It's kind of consolidating. Watch Google early. It can probably move 28.90 on the downside. MACDs are still rolling up. It's probably going to retest that 29.46. If it starts breaking through, and I don't know what the price action is going to do, but it's probably going to go to that 3,000 at least, around that 29.88, 3,000. If it starts breaking down, and that's a possibility, and if Google breaks down, then you know that the whole market is going to go down. These guys did well, and they're probably going to go down. Okay, so what do I mean by that? 28.94. If it comes back up to the right here, I'm going to make this a little bigger for you because this is important. If this starts going back up, right, right there, and this starts going up back there, that's going to be a setup for either up or down. Now, if it goes up, and again, this is all about the overall market. Now, Amazon's going to save it, but watch Amazon too, because maybe if somebody knows something, if they start selling it off early, but it should, in theory, hold here at least until those numbers. So Google should move one waveform or the other. Okay, so we got that. As far as Amazon, they're taking it lower pre-market, right? It's working higher. Let's see how Amazon is. So watch Amazon, because if Amazon doesn't do any of those things, more than likely, Amazon will probably go to 2,500. All right, so let's look. Right, no, that's Google. All right. Let me go here. All right. If we go to Amazon dailies and we'll start breaking it down. Whoa, that is huge. All right. Again, we have another dead cat bounce trying to go higher. Again, earnings today. Amazon could go back down to 27.44. Right. If they say split, it's going to go up. It can probably go to 33. Right? Maybe higher, 3,300. If they say split, is that going to happen? Don't know. And the options are stupid expensive. So remember, on Friday, if you want to play the split, what you can do also, and let's look at the hourlies here just to kind of give me a better idea. We broke down to 50 yesterday after, and this is Facebook, right? It broke it down. Now, the thing about Amazon, they did really, really well during the pandemic. So let me see here. I wrote some notes down here. Think about Amazon. They did well, right? They did well before the pandemic. But the thing about it, they have a lot of things moving forward into this year that is against them, okay? So it's against them. So the only two things that are saving grace is going to be... it's either going to be, like I said, split, or I can't find my notes. That's why I'm hesitating. But I'll look at them up. Maybe I'll do it for lunch. I had them on a sheet. But right now, it looks like they're taking it down. Where can this thing go? It's probably going to go to that 27.48. As you can tell, this is where it landed a nice little basing pattern. It's about to break through, and they're taking it lower. So this is telling you that the market is thinking these are not going to have good numbers. They're going to take it lower. Again, now these guys are getting ahead of themselves. So I don't know. Again, they could split. Don't know. But the other thing I was going to tell you, on Sunday, I told you there's a way you can play this and not go straight put or straight call. And that is you do a spread. You can buy put, sell put, right? And that will reduce your cost basis. But here's the thing. Amazon will move. So if we're taking this as a trade, Amazon will move, okay? So wherever it's at the close, Amazon is going to move about 100 points, maybe more. So if you do the spread trade, that's going to help reduce the cost of your trade. So just kind of giving you that. And on Sundays, I mentioned that. Like, so for instance, buying the 29.75, 29.70 or $10 spread, and that could help you reduce your cost basis instead of going straight put or straight call. So just giving you some ideas there. And you can still take advantage of if you want to trade the earnings. Tesla, watch Tesla. Again, the companies that did well, you got to watch today, because if they're taking this one down, they're going to take everything else down. Okay, so again, and then that's what's going to be indicative of the dead cat bounce starting. They're starting to liquidate. Okay, remember, these things usually happen when nobody else is looking. So maybe if you feel like you see Google and Tesla working its way lower, then you're probably going to want to get into some puts on the XPX. So that means that they're going to start to liquidate this thing. Okay. And maybe it might not happen today. They might prop it up, maybe get it for a longer term, maybe a week, 2 weeks out, but get SPYs, something. CMG working its way lower. So again, everything is propping up. Tesla's working his way lower, propping up. Amazon, look at this. This is unreal. Amazon into earnings are taking it down. Okay, Google, watch Google early. Now, right off the bat, let's go. Lam Research, the chips. If they take down the chips, guys, just get ready. Goldman Sachs goes down. If Goldman Sachs breaks 357, the XPX goes lower. Netflix, okay, they took it down. They're taking down Netflix. Okay, so yesterday on Netflix, we tried to set this up. We didn't get the setup. The reason why is because, look at this. It tried to set up, couldn't break the 50. MACDs were going low, and this is why it saves us from what? Getting into a bad trade. This is FOMO buying, right? This is where everybody else was thinking the same things we were thinking, which is fine, but we knew that this was basically a bull trap, and this is a bull trap. They trap the bulls, people buying in, thinking it's going to, and then it just collapsed. And do you want to get in there? No, it's still collapsing. We don't want to get in, right? Actually, maybe some puts, right there. 424, if it starts breaking through, it's probably going to go down to about 394, right in there, 388, unless, so watch that. Again, Mercado Libre, where are my Netflix? Roku, probably going to work his way lower too. So watch that. This is following Netflix. NVIDIA, if they take down NVIDIA, guys, then that's a good company. Then they're going to take down the other stuff. So again, Mercado Libre working his way lower. This is an Amazon play. This is going to follow Amazon. Okay, Melly. Apple working his way lower. Apple did well. If Apple breaks 170, look out below, guys. Look out below on all the indices. Shopify is another way you can play Amazon. These are going to be a little cheaper because this will follow Amazon results. It probably looks like it's going to work its way back down. All right, there's a couple things I want to look at here. Now, here's a play that I think Trade Desk working its way lower. So again, these guys did advertisement sales. Don't know what's going to happen here. Let's see what happens. It's trying to hold, working its way higher, but let's see. Needs 65 to get better, or is it going to work its way lower? Affirm and Upstart. I want to talk about this. Let's talk about Affirm because I think this could be a play, maybe for today too, but I want to talk about this company. Now, here's the deal, guys. Affirm is a company. Basically, they do layaway plans, okay? There was a lot of hype on this company. It opened up, gapped up, and it just ran up. Okay, ran up because they got all these contracts with Walmart, blah, 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 Amazon, right? I still can't find the terms of their deal, right? Like if they don't pay, who's responsible? Is it the manufacturer? Is it the company that sold the product? Or is it a firm? We already know that the numbers come out that 53% of people who do layaway, they're not buying. They're not making their payments. So now interest rates are increasing. So who's getting stuck holding this back? Now, these guys have earnings, right? And that's February 10th. So PayPal just got hammered. What are these guys going to do? So, I don't know what this is. So somebody's been getting out of this thing in truckloads, okay? So now we do have a divergence here, but I think I just, from everything that I'm reading, and this is just my opinion, guys, okay? We're going to look at price action. But the price action tells me this is going lower. Based on what I'm telling you, Amazon comes out with bad earnings. Where's these guys going to be put? Retail investor raising interest rates. I think this company is kaput. I think Peloton was their main customer, responsible for about a big portion of their business. Look at Peloton. And Peloton, remember Peloton? Peloton is not going to give them that revenue anymore. So, and Peloton fell from $171 to $26. And then we go to Affirm. So here's a play. Here's Affirm. If you feel what I'm feeling, that if Affirm, they lost Peloton, 53% default, is this really worth $68? It's not even worth $50. I think this is going back to $10. So FYI, earnings is, again, that was just strictly opinion related. February 10th, I'm not looking at as far as an entry, just kind of giving an idea of why we're not noticing these pops aren't holding. They're selling the pops, okay? Just giving you an idea there. So I'm going to be looking at this to short on a longer time frame. I don't really believe in this company. I'm just going to, every time if it pops again, I'll probably short it again. But again, this is something I've been trading. I definitely loaded up there just because of that. So I've been talking, and so this was my reasoning behind that. Okay, this company is just easy when you look at the numbers. All right, so there you go. Upstart has an AI component, So again, but this one is a little bit stronger than the other one. But this again, they're taking it down. All right, so let's see what plays we have here. Coinbase. Now, if Google goes down, guys, the Coinbase is probably going to go lower. Watch it. That might be a trade there. 100 on top, nice round number. Can probably go down to like $94, maybe $87. It's possible. And if the XPX really drops, can go down to 75. So there you go on Coinbase. What else do we got? Do we have? Let me see. Let's look at Facebook. Facebook is going to drop, man. I just think it's a lose-lose situation for Facebook, because if Amazon announces bad earnings, it's going to take down Facebook even lower. If Amazon has good earnings, money goes from Facebook to Amazon. So I don't think Facebook is done, right? It's going to probably drop a little bit more. Again, too far away from our system here, but just kind of give you my synopsis. Let's see. What else do we have? We have Netflix. Let's look at Netflix. On the hourlies, Netflix broke yesterday at the close, right? And it's pre-market, not looking good. There's 430, meeting a lot of resistance, a lot of supply up there. They're probably going to take this one down. So that might be a trade at the open right there. If this thing goes down, could probably get out 388. That's the next level down. 394. There's a level at 413, 400, 394. So just know somewhere in there. But it looks like it's about to go. Okay. It looks like it's about to go. It has a lot of selling pressure up there. What else do we have? Let's look at Ford, just because somebody brought it up. Ford, GM. Now, here's the thing with Ford, guys. Ford has, there's a lot of hype around Ford. I know the Biden administration likes this company for whatever reason. And like I said, there's only responsible for 1.5 or 2% of their inventory is EVs, and that's responsible for their overall sales. So think about this. If they convert and they're building all this production and these warehouses, right? Which, by the way, who's paying for it? Taxpayers, because they're getting help from the government. So that means you and I are paying for that. That is still going to take time, okay? And they're still not going to produce a revenue on those vehicles that they sell. Their batteries are not really there yet, right? So whereas Tesla already has a manufacturer, they have their Tesla, they have the data, they have everything, and they have the reputation. So I don't know what the hype is on Ford. And here's the thing about Ford, guys. As you transfer from your making your EV vehicles from gas power vehicles, which are known for your trucks and all that, and your batteries are not good, you're going to lose revenue on your gas powered vehicles. Okay. And that's revenue that's holding this stock up at $20 until your EV sales built up and you're having battery. Again, you have a lot of ifs. You have to make the factory. You have to do research and development on your battery. And then, autonomous cars, that's another expense. So there's a lot of expenses in Ford, and that's why I'm not buying this Ford thing. I think that Ford, if everything, and again, if money becomes more expensive, are you really going to buy a Ford at a higher price? So again, that's why I'm not really buying the hype on Ford. Okay. If you have time, let me see. What's that? Time talking about how you find momentum stock scan, etc. Yeah, great question. So what I do here, if you follow what I do, it just basically is the same system. I trade these momentum stocks, the same ones over and over again, and that's why I know them very, very well. So again, I look for high volatile stocks that are going to move, and That's yes. So and that's how I find this trading the same thing over and over again. Every once in a while, if I see something that's moving, then I'm more likely going to, you know, trade it. The system works on any stock, but I just look for, you only need a handful of stocks to make money, right? So I just focus on the ones that are going to move. I just expanded this to about, you know, maybe 24, 28 stocks that I watch. Yeah, so Win says here, they're focusing on autonomous. They partner with Lyft and Walmart, 100%. So the thing about that, the partnership is great, but the challenges still exist that their RSD development on autonomous isn't there yet. So how long is that going to take? You know, so that's the thing. And then those partnerships that actually cost money, right? Because those partners are going to take revenue from you. So that's not 100% revenue that Ford is getting. It's going to be a portion of it. But you know, they're far away from there. So again, guys, it looks like a firm is about to break. Qualcomm's about to break, and this is huge, guys. So let's go to Qualcomm. Qualcomm came out with great earnings, amazing earnings, and this is a tell, right? Guided up, great earnings, and it's not up. So that means the market's a little weak. It's a little spooked right now. So again, you know, this should be up. This should be up at 200 with the earnings that they came out, but it's not up based on XPX. XPX is down. So look at the spiders. Let me see if I can find something. Spiders are working his way lower. Too far away right now. Too far away. Let's see if it can come back to that 448 on the spiders. And this is the XPX, guys. So again, let's see if we can rally up here. Let's see if we can set it up at 454. If it can turn and climb up there, that is a possibility, but don't chase it if you want to trade spiders instead of XPX. The QQQs, again, just, you know, pre-market trying to work his way. Let's probably wants to break a little bit right there, but too far away from the 50. So let's go to something else. IWM, pre-market. So this is the one that you saw weakness yesterday, and this is the weaker out of all three. I didn't look at this, but that was a trade going into today because it broke the 50. Once it broke the 50, it's really hard for it to get back up, especially. So the dead cat bounce has started on IWM. If this breaks here, then this definitely has started already on IWM or Russell. Watch right now that 200 level or 2,000 on Russell. It's key. If I go to Russell, if we go to Russell hourlies, yeah, that 2,000, no, it's a little bit further away. Yeah, 202 on Russell. Well, it's 205 on IWM. So 2050 is going to be hard right there. If this starts breaking down that 2,000, it's probably going to work its way lower to 19. You have 100 points there, so watch it. All right, guys, today's really all about Amazon again, and just get ready for, like I said, get ready for that potential move, right? So momentum is going up, and then how far up is it going to go? If we go back up here, how far up is this going to go? It's going to go, and then what happens? It's starting to die out. It's going to start to die out. So again, just get ready. It's going to start to die out, and just get ready, guys. All right, guys, it is 9:10. I have 20 minutes to get ready. You know, pick your poison. There's a few trades to the downside that I'm looking at. So pick your poison. I will be, I'm going to pop in a trading view probably for 15, 20 minutes just to kind of say hello and see if there's anything juicy. Zoom is breaking down, guys. Let me look at that real quick. Zoom is breaking down. Zoom is starting to break down. And you know, it's funny. Things change in the matter of like 20 minutes, especially the last 30 minutes here. Zoom starting to break down here. Okay. Zoom starting to break down. Has momentum here. Let's see. Zoom is starting to break down. All right, let's see. All right, guys, go out there, go get it. Let's get it. Let's get it. And if you have any questions, let me know. And all right, guys, I'm going to get ready for my day. Thank you for tuning in. If you haven't liked, subscribe, please do so. If you want to go into the class, I have a Patreon thing at the bottom. Helps you, just sign in. All the information is in there. And go out there, go get it, guys. Go get it, go get it. And I'll see you at lunch. All right, take care, guys.